Hi, Sebastian. Welcome to Face.
Hi guys, it's an honor to be in here. Indeed, great analysis by Steve.
Yeah,
Uh,
he's yeah, yeah. It's he goes through the board every day and keeps people straight in the markets. Really a pleasure to meet you, Seb. And there's a green share button on your
y-
screen, and
yeah,
you could share your screen, and then we'll have the pictures. Beautiful.
can you see my screen?
It's coming up. Look at that. Yeah, I see the. All right. So yeah, seems like you are a little skeptical about central bankers too. So why
A
don't you
little
tell
bit.
us? Yeah. So Seb, you're a fairly young guy, right? You're under 30.
Yeah, I'm turning 27 on June actually.
Okay, so that's long enough to have your nose bloodied a few times. Tell us what you were
What
doing
day in
before you.
June?
26,
Ah, okay, I'm 12. Okay.
All right, well,
12,
you're
two
checking out
weeks.
his astrological sign, Steve. This is not Match.com here.
No,
All
I
right,
don't
so
believe in that.
all right, anyway, anyway, so Sub, what were you doing before you got involved in trading? What led you into it, and tell us a little bit about your pre-market history.
So I've been training since 2 years, but I've been interested in financial markets and macroeconomy since more than 5 years.
Okay,
So
all right,
yeah, I started to be interested in that during my bachelor in economic analysis.
okay,
So yeah, I was apart from my studies, I was reading a lot of blogs and books. I was actually inspired by one of the most famous blogs in Poland because I'm come from Poland.
okay. Nostrovia.
Nastrowie, thank you.
All right, so who was the guy in Poland that influenced you? I'm curious.
So his nickname is Trader21, and the website is called Independent Traders. So they conduct some macro analysis as well as analysis about different asset classes, including companies. So they also conduct some. They manage some portfolios, and they also have their own portfolio,
Okay.
like since more than 10 years, or maybe even more.
Did you gravitate more towards the fundamental analysis and teach yourself technicals, or we'll know after the cartoon? But why don't you tell us if you think the guardians of the economy can really save us, or they're merely going to turn out to be cartoon figures?
So yeah, the graphic shows guardians of the economy, but nowadays it's actually more like guardians of the stock market, I would say.
Okay, I agree.
Um, yeah, because every move, every statement, every kind of jawboning by the central bankers uh, influence the stock market and related assets, as you've speaked about that
Yeah.
during this session.
Okay. So, in that kind of environment, do you have any kind of narrative that you're following as far as where to go to both protect yourself in this environment and where to capitalize on all the events that are lie ahead for us?
So in responding to that question, I would like to show you this graph
And by the way,
because
whoever drew that cartoon sure made Lagarde look pretty hot for a senior citizen. Go ahead.
yeah, indeed.
All right. So
Actually
money's the, huh?
founded on, but I think Jim Bianco from
Oh,
Bianco
okay.
Research posted on Twitter.
Okay. All right.
Okay,
So interesting. The correlation between money supply and the S&Ps, is that
yeah,
a
so
big part of
last
your
10
work?
years, Yeah, last 10 years have been pretty easy. Actually, the global money supply is here for 12 largest economies. So it's been a coordinated like action by the biggest central banks, uh, improving their balance sheets, cutting rates or keeping rates so low for the last decade. And as we know, the European Central Bank, Swiss National Bank, and Bank of Japan went even further. They went below zero. So actually, I believe it boosted the stock markets around the world until something broke last week, as we can see on the bottom chart. So the correlation has broken. So S&P 500, as we know, has recorded one of the fastest, I think the fastest 10% correction in the history.
Yeah.
And in terms of this, I would like to show the Monday session, so the yesterday session.
Okay.
You mentioned that the volatility on the markets is back, and this chart shows the open Monday open. So we had a gap down over the weekend, more than 3%, actually 3.5%, and then we went up more than 4%, actually 4.5% overnight. In Australia and Pacific session, and then when the Europe came, they dropped the S&P futures to almost 4%. And before the United States came, so the biggest volumes, the S&P futures went up by almost 3%. And so you've had actually four big moves before the biggest volumes came to the market in only one day. Before that, as I noted on the chart, we've had 70 straight day trading sessions with a move less than 1% at close for the S&P 500. It was before January 28th. So those type of moves are really unusual, and it's like sort of like a little warning for traders that if you use high leverage, you could be wiped out. Your account could be wiped out like a couple of times during one day.
Yeah, so the character of the
crazy.
market has changed with the VIX trading in the 13 range to a lot of people weren't looking for mid 30s. In fact, I was looking for higher VIX. I wasn't sure how high. So now that the character of the market has changed and you're talking about all these intraday swings, do you believe that day trading is a better way to handle it, or just continue to position trade with lower leverage?
Actually, I used both, but nowadays I'm trading on using daily candles. So first I'm doing an overview, macroeconomic overview, what is going on the markets, what the central bankers think, what they're gonna do, also from the fiscal perspective, and even the things like the recent polls of the U.S. Preliminary elections,
Yeah.
which can affect the markets around the world. I've learned that actually during my master course, when we've had sort of like a trading bootcamp with Amplified Trading, is a company based in London in the UK, which teaches young traders who later on goes to the biggest financial institutions in the world, like Morgan Stanley, Goldman, etc. So I think that the guys know what they are doing, and I'm actually watching their trading briefings almost every day, because they combine macro view with the simple technical analysis.
Okay.
So I learned that from them, and I'm applying that to my training So I'm holding positions over few days or over couple of weeks, but the last trade I made, I actually traded the bounce on the S&P 500. So I held only that position. I held only over the one session because the move was actually huge. The Dow Jones actually has jumped like more than 5%. So
Okay. All right. And what gave you a buy signal? What
a buy
you know,
signal.
you may have had a view, but you said you trade daily candles. What daily candle told you to get long for yesterday's reaction?
So over the weekend, I checked the news and the news flows, and I seen the statement from the Jerome Powell. It's actually the statement came on Friday, 2 hours before the session. It's this one. So
Okay.
usually central banks they never go for an emergency cut or for a new asset purchases program. They first trying to use the forward guidance or the so-called chair boning. So that was the first move from the Federal Reserve and
Okay.
the statement by Jerome Powell. And then on Monday, Bank of Japan came, and actually before the session, there were rumors that Bank of Japan gonna buy a huge amount of exchange traded funds. So I think
Okay.
everyone is they are trading like stocks.
But you don't select your entries based upon a news article. There's got to be something that is a trigger for you. You
Yeah, and
just
then I
read a
looked.
news article and say, "Well, that's bullish. I'll buy
No, no,
it
no. And,
anywhere."
then I looked at the chart of the
Okay.
S&P 500. And
Okay.
I seen that it's like hugely oversold, but of course it's been oversold since 2 or 3 trading day sessions. But actually, the S&P 500 touched the level and not since October 2019. So that was a bounce from that level. So I saw this area between 2,900 and the lowest the levels and not since October 2019 as
2850.
a
Yeah.
as a point of entry. So I went long and I put my stop loss below that level, like not exactly to the tick, but like 10 or 15 points below that level, just to keep
Okay.
my risk reward, in in a sort of
Did you have a
sensible
target?
way.
You told us about your stop. Did you have a target for that trade of where you would come out of it? Are you still long? Do you take partial profits? Do you trail stops?
No, I'm not using trading stops. I'm using only stop loss, and I'm closing position mostly, like if it's profitable, I'm using closing position using hand. So I never have a target because it depends what's gonna happen, like in the news flow.
Hmm.
So I'm usually like roughly can estimate the risk reward of the trade, but I never done that. Like I've never materialized that to the tick.
Okay,
It's
so you're
like
flat now. You're flat now, right? You took profits on your long.
yeah, and I'm staying like on the side for now. I'm watching what's going on the market, and
Okay,
I'm
nothing wrong with
looking.
that.
Yeah, I'm looking for being engaged again in gold. So I'm probably looking what's going on in the market. We'll be looking for some long position in gold, and I'm usually divide my positions by two. The one is double larger than the previous one because I don't have like much capital to to separate using a few or more positions. So now I'm
Okay,
trying to learn how to navigate in this market.
okay.
So that's the my approach, which actually from month to month it's developing.
Okay. Um, Anything else you brought for us to discuss?
Uh, I wanted to point out about one thing when we also experience this volatility. This chart from Bloomberg comes like from 2018. It shows that more than half of fund managers have never experienced a bear market.
Yeah.
So that may be another reason of the last huge volatility and huge moves, because most of them maybe uh, they never seen the things like we've seen over the last week, and most of them basically panic. That's why we also partially seen the gold drop. The gold drop by 4%, right, on Friday, or 5%,
Hmm. Yeah. Why
because
do you prefer gold over silver?
yes, I do. Silver
Why?
for me, silver is more bullish in a period when the economy recovers, not when economy is after a very long expansion and is a higher probability that in a year or 2 or 3 years it's gonna fall into recession, because it's silver is more industrial metal. Gold is more regarded as a safe haven. So
Okay.
if you look at the previous bear market and the previous recession in the United States, gold behaved well during the bear market after 30% drop first and then started to recover, because it's been a liquidity crisis, so people were selling gold to actually uh, have some cash and liquidity, and then gold started to increase. The silver actually. I think you saw the silver gold to silver ratio on the last webinar, that the gold to silver ratio spiked during the bear market, but when the bear market ended and the economy started to recover, silver has started its rally,
Right.
because
Okay.
it's a supply and demand.
Got it. Any view on the dollar?
I'm actually in the opposite what actually Steve said. So I see the dollar over the next 10 years to gradually increase. It's not gonna be like exponential increase, or it's gonna be choppy. But over the next 10 years, it's going to increase simply because of demographics, and because of that, technology and resilience of the economy in the United States will be much better than in Europe, than in China, than in Japan. So it will lead to higher interest rates and a better economy on a relative basis to the countries I just mentioned.
Okay. So
So
euro, where could would the euro was 107.5 a few weeks ago. Do you see the euro, first of all, continuing holding together, and subpar euro, is that in your longer range view?
So what we've seen, you saw the chart, you showed us the chart that the euro dollar just came up to the long term declining trend,
Okay.
and and I think the trend will continue. Like for me, the eurozone economy uh, is broken, and it's not far away from the collapse of the European banking system. It all depends what will happen in China over the next year, over the next 2 years. And if China will have some troubles, uh, uh, it will
That'll be the
spread
final
over the
straw.
Europe. Yeah.
Okay, so if China catches a cold, Europe gets pneumonia, or should I say corona?
Sort of like that.
Okay, so it sounds to me like you believe there is potential for a major crisis in China. What would be the catalyst for it? All the debt, ghost cities, the yuan. What are you worried about when it comes to China?
It's a toward. So we came to the point where in China you have to produce 1 unit of GDP growth. You have to issue 7 units of debt.
Okay,
It's
so
it's a lot, and the debt, like people say that the amount of debt doesn't matter if it's easy to, if it's possible to manage that debt and to roll over. But the total debt to GDP in China have breached 300% of GDP, and it's excluding shadow banking system, which Chinese authorities stopped to report data about in 2018.
Okay.
So we don't know really what's going on there in the shadow banking system.
Okay.
But I'm not really like positive about the levels of debt, and it's simply law of diminishing returns.
Okay. All right. So with all of this debt to GDP, and China's not alone, and the U.S. is what, 150 to 200%? How does the debt get resolved? I guess a big question is, and you're kind of constructed the dollar. Do central banks inflate their way out of a debt crisis, which could lead to hyperinflation, or do they default on their debt, which leads to a deflationary depression?
In terms of hyperinflation, I think that scenario could happen only when the MMT will be introduced, like full MMT, opted by the socialist parties in the US. Otherwise, I don't see like significant inflation in the United States in the upcoming years. Like in this year, actually, I see inflation to drop, and when we look at inflation, we actually should look at inflation expectations, and these ones gradually dropped again. In the Eurozone, those have been falling over the last few years. But in the US, over the next 12 months, I see more deflationary pressures than inflationary pressures. And the central bank's actions not going to help, in my opinion.
All right, Sebastian. So if people want to follow you, I went to your blog. You could show your blog if you'd like, so people could follow you and keep in touch with the things that you're seeing. I will say this, that you definitely have a very good feel for, I asked you a broad base of questions. You were able to give me some interesting answers for having, really only been in a market watcher for 5 years. So you have a bright future ahead of you as a market commentator, Sebastian. I wish you a lot of success. And do you want to show
Thank
your
you.
blog so people could take a look at it? And you know what happens after people are interviewed with me, Sebastian? Any idea?
I think, no, I'm not going to guess.
Okay, you become my trading warrior brother.
All right.
All right, so you like it or not, Sebastian, my trading warrior brother?
Of course I do.
Okay, you've walked on fire being interviewed with me. So I really appreciate you having wanting to share your ideas with people and giving them some sound ideas to consider, and wish you a lot of success, and let's keep in touch.
Uh, Thank you so much for inviting me. I would like you to ask whether you can conclude this interview with your coronavirus song. It's astonishing. It's brilliant.
Oh, you mean Corona, Corona?
Yes.
Fear that I'll own ya? Born in a lab in China, spreading so I'll find ya. No one is safe, not even a king, and I'll be the excuse for everything.
Beautiful. Thank you so much.
And Sebastian, this is really how I end our webinars. Remember, everybody, don't just count your pips, count your blessings. And we'll see everyone tomorrow. Safe trading, reduce your leverage, reduce your time frames, and it's okay to do nothing. The markets will be here when you're ready. So thanks again, Sebastian, and everyone out there. Have a great trading day. See you in members chat, and adios. We'll see you tomorrow.
Thank you so much.
All right. Thank you, Seb. Adios.
Adios.
You're welcome,
Bye-bye.
Monica. Bye-bye.